All right, day 6 of the boot camp. This is gonna be day 3, I think, of technical videos. I filmed the motivational or like psychological video like 20 minutes ago for today. Posted them same day. I didn't get one out yesterday. Sorry. It's gonna be third day of actual content days. Today is gonna be liquidity. I really like liquidity. I think it's probably the one I use the most. It's my favorite confluence. I'm gonna give it to y'all. I'm gonna show y'all how I interpret it, how I use it. It's gonna be kind of hard just because you'll see in the end everything kind of ties in for one thing, so it's gonna be hard to kind of show it individually, but it shouldn't be too hard to explain. This is probably the first thing when I started learning to trade. It's probably the first thing that kind of opened my eyes to it. So first off, let me write these. So you have two types of liquidity. You have low time frame liquidity and high time frame liquidity. So low time frame liquidity is typically like the 1 minute, 5 minute. I'd probably only go 1 minute, 5 minute. In the high time frame, I would even go 15 minute for high time frame. 1 hour, typical 4 hour, and then daily. So if you have low time frame liquidity, that's gonna be on the 1 minute, your 5 minute, right? 3 minute, whatever you trade. High time frame liquidity is 15 minute, 1 hour, 4 hour daily. Just keep this in mind, okay? Hold on, I'm getting blown up. Keep this in mind. The higher time frame sweep you have, liquidity sweep you have, the more important it's gonna be. All right, I know you don't know what a liquidity sweep is yet, so just keep that in mind. But the higher time frame, the more important it'll be. So, all right, we have our trend. Oops. So, right, we have our trend. We all know what a trend is from what, day 2? Here's your trend, right? Boom, 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 boom. That's your typical price action. So your higher highs, your higher lows, higher highs, higher lows, right? Higher, or lower low, lower high, lower low, lower high, lower high. Just the typical price action. So where price is reversing, right? You have a higher low, higher high, higher low, higher high, lower low, right? We already know this is where price reversed, right? We broke structure, right? Break of structure and reversal go hand in hand. Right here, okay? So what do you have? First of all, I'm just gonna add this. We all know that hedge funds and index funds, or just hedge funds, and big banks, right? They control usually where price reverses because they have so much money they can put in the market. They can make a massive impact on where it's going. They think, okay, here comes the hedge funds and the big banks. They think, where will price get my orders filled at? Gosh, I can't type, bro. Okay. Where will price get my orders filled at? All right. So they're sitting here looking at the chart just like us. Sorry if I'm cutting it off above my head. I gotta remember that. Sorry. So where are my prices? Where are my orders gonna get filled? Right. We all know what liquidity is. Okay. Liquidity. Actually, we don't know liquidity. That's why I watched this video. But liquidity is just resting orders. Okay, so if you have orders, right? If somebody's like, oh, I'm going to set an order right here, right? I'm going to set an order right here to go in short, right? That's an unfilled order, okay? Because it's just the order's just sitting there. Price wants to reach those orders, fill them, and yeah, price just wants to fill orders. So the big banks, they think, where will price get my orders filled at? So where are my orders going to fill? What price? They see all this reverse here, and they think, well, obviously, I would want to put short. I would want to go short right here, right? Because it's already happened. Like, this would be the best place to get in short because this is where everybody's short orders got filled in, right? You can see that because it filled in your short orders and then it sent it down, right? So everybody went in short right here. They see that and they go, all right, so in the future, where should I want to put my sell orders again? right? And it would logically make sense to put them at the same point here because this is where they got filled in before. Okay. So they put their short orders right here. And then price reverses again. It's called a liquidity sweep, right? So the big banks, hedge funds, they put their $1 million orders, hundreds of millions of dollar orders right above these highs because that's where they got filled in before. It's like a pimple on my face, bro. I'm gonna get distracted. It's where they put, tens, $100 million orders at these highs, right? Once price comes back up, it hits all these orders, right? So now we just put $300 million worth of shorts into the market. What does price do? So that just sends it, crashes it, right? It's called a liquidity sweep, right? We swept the liquidity and it went down. Okay. So, later on you can see, right? If you see, okay, if you're right here and you're like, price may sweep this, it comes up, it sweeps it, right? You have a break of structure, break a trend. You probably have fair value gaps, inverse fair value gaps. You'll see all that later, but so that's typically a liquidity sweep. Okay. So you have prices for normal price structure, right? Where did price reverse, right? That's probably where orders are going to get filled again. Price comes back up and it fills those orders and then shoots it back down. Okay. I'll show some examples of this on low time frame and high time frame. I would say typically in your strategy, for me, I use high time frame as where do I think price wants to go on the day, and I use low time frame on where do I think price is going to go like right now. I know some people have different takes on that. I don't think TJR really uses it like that. He might, but yeah, I just use high time frame is like where do I think price wants to move on the day. I'll show some examples of some liquidity sweeps. This is a perfect example right here. This is a high time frame liquidity sweep, okay? So 4 hour. What do we have? Price come down, right? Come back up, okay? So we're right here, right? We're right here. Say this, so just cut out everything to the left of that, everything to the left, okay? So price is thinking, if my orders got filled in long, where do my orders get filled in long again? At these lows. Because what happened here? Price came down, and then it reversed off this point, which means price would probably reverse off that point again. That's just logic, right? So what do? They put their orders here. Price comes down. It gets all these orders out and then fills back up. Right? The same exact thing happened right here. Right? Boom, reversed. They're thinking, where's price going to go again? Let me see if this makes sense on the line chart. No, doesn't really show it on the line chart. So what does it do? Price comes back down. It sweeps these orders, fills these orders, and sends it back up. You could go here. I think I actually took this trade. This is a little bit more complicated because you're taking out multiple here. Take out this. It did take out this. I don't think it took out this. No, it didn't take out that. Right, so here's all these points where price came, going down, but price was reversing at these points right here at these levels. So what do? We logically think here, where is price going to reverse again? It's going to reverse at all these resting orders, right? So you put in your, I don't know, but the things, right? Inverse fair value gap right here, get your entry, put your stops at these lows, put your highs at the last point, right? This liquidity, right? 1 to 2.63. Same with here is your liquidity sweep. All right, what does price do? Boom, boom, boom. It's reversing off this point, right? Price comes down, it takes out all this, fills all these long orders, and goes up. I'll go on the low time frame now, see if I can find one. It's gonna be a little harder just because I have as much as one. What happens here? Price completely reverses off this point, right? We say, where do we think price is going to reverse next, right? Obviously, right here where all these orders got filled. So price comes down, right? It's going to fill all the long orders and it's going to come back up, shoot back up. Perfect example of a liquidity sweep. Here we go. Another one. Right, price comes down, fills these orders, from this liquidity, right? And then shoots back up. Same right here. Price comes down, shoots down, fills down these orders, and shoots back up. It's easy stuff, right? So just try to get everything back in your mind just based off liquidity. Liquidity is just resting unfilled orders in the market. What does the market want to do? The market seeks to fill orders, right? So market wants to fill your orders, long or short. So typically there's the most amount of orders placed at those liquidity zones, right? Those liquidity points, which is why price just seeks to take out liquidity constantly. Okay. So I just want you to go on your chart, right? Find, 5, 10 good examples of low time frame liquidity sweeps, and then 5, 10 examples of high time frame liquidity sweeps. I'll probably end up doing another video on this just because when I started my boot camp, it kind of went over my head a little bit, I'm not going to lie. So yeah, I'm doing another video on this just to kind of give y'all some more insight on this. But yeah, that's all for, day one of liquidity.